The euro's seen a bit of a bounce at the moment, but it has been under some real pressure of late. In fact, overnight it hit its lowest level in more than 4 years against the U.S. dollar. It's being driven lower by concern about Europe's debt and how countries in the region are going to be able to dig their way out. How low will it go? What does it mean for the overall equity trade? Let's ask Ann Bartels from Bank of America Securities-Merrill Lynch Research. Institutional investor says she's one of the best on technical analysis. So, Marian, with that in mind, give me a sense of what levels we need to be watching here, particularly for the euro. We had been at that 4-year low. We're seeing a bit of a bounce up. What range do we need to be focused on here?
Well, the critical level is going to, everybody's looking at the 120 level. I'll allow for a little bit under that, maybe 117, 118. But if those levels don't hold, the next target for us is going down to par. So this 120 region is going to be very critical for the euro.
So what's driving that? I mean, what could bring us to testing those lows?
Well, obviously, there's still concern about the sovereign debt issues over in Europe. We're starting to see the LIBOR-OIS spread, which is a measure of risk, start to break out of a base, very similar to what we saw towards the end of 2007 when we began our financial crisis. So the market is starting to price in more risk. So two things that we're telling our clients to put on their radar screen is that 120 level on the euro, but also where are we going to go on LIBOR versus OIS? And technically, we're projecting that it can go higher, anywhere between 50 to 100 basis points.
Yeah, we're seeing LIBOR at the highest level in more than 9 months. So given those elevated levels, what's the carryover for the U.S. equity trade? What do we need to be watching in the broad market?
Well, this indicates to us that we're going to continue to have some more volatility. And what we've been pointing out is that we're in a midterm election year. And there's a cyclical pattern that evolves most often where you have rallies up into the spring, you peak, and correct down into the fall. And we seem to be following this pattern. We do believe that the S&P is going to test the 1100, 1050 range. The critical level for clients to watch is 1044.50, which is the February low. If that low is broken, we'll go down and test the base breakout that happened in July of last year that could take the S&P down to 1,000 to 950. So these are very important levels for investors to be watching. Getting down to 1044.50 or testing that level would be a 15% correction off the 1220 high for the S&P. So we're really viewing this as a correction, not a new beginning of a bear market.
Yeah, we're looking at 1136 at this hour on the broad market. Talk to me about gold, because we've been watching it climb either as an inflation hedge, or some would say purely as a carryover from a stronger dollar. It's pressuring other commodities, but gold's still on the climb. How high is it going to go?
Well, we've had a target for some time on gold of 1,500 to 1,600, and we're still very comfortable with that target. We're getting a nice little breakout again here in gold that in the near term will target the 1,300 to 1,325. But as I said, I still think we're going to hit 1,500 to 1,600. The gold stocks are also supporting this breakout in gold. The gold stocks look good. And what we've been pointing out is that gold has kind of decoupled from the dollar. Normally, a stronger dollar you don't have with stronger gold. Really what this is a story of is a weaker euro, not a stronger dollar. So that's the reason we think for the decoupling of gold and the U.S., the strength in the U.S. dollar.
All right. Gold being treated as a currency in your view?
Yes. I mean, we always say gold wears 3 different hats. People that are concerned about deflation like gold, people concerned about inflation like gold, and it's a store of value. So it really answers a lot for a broad investor base. So we continue to like gold as one of our favorite areas of investing.
All right. Thank you so much. Ann Bartels joining us from the floor there at Bank of America Merrill Lynch.